Welcome to the Small Business Tax Savings Podcast, your weekly dose of accounting and tax tips specific to small business owners. You will be on your way to growing your business and paying the least amount in taxes as legally possible. Here's your host, Mike Jezoshek, CPA.
Hello and welcome back to another episode. Today we have a special guest on. We have Matt Ruttenberg over with Life Inc. Retirement Services. And for those of you listeners that have been around for a while, you know Matt. Matt's been on quite a few episodes with us and is truly our trusted partner when it comes to anything retirement related, especially for your business. And today's topic, we're going to be talking about what retirement plan options are available for your business here in 2023. So we're going to be going through those retirement plans, kind of giving some information. And of course, in our show notes, we have a link to a blog post. If you want to get connected with Matt, if you want to learn kind of more details about what we're talking about today, we have a full blog post that's outlining those. But Matt, welcome back.
Thanks, Mike. Appreciate it.
Awesome. So I think a perfect place to start when we talk about business retirement, and for those of you that didn't check out our Secure 2.0 episode we did with Matt, check that out. I'll include that in the blog post that we do for this. But we talked about some really cool things. Like if you're an employer that is not offering a retirement plan, like now is the time to do it. The government is providing a ton of tax credits that help you with the administrative costs, help you with some just auto enrollment you get a tax credit for. There's also contribution credits if you're under a certain business size. So like if you're thinking about or looking or have been wanting to offer retirement as an option to your employees, I think there's no better time than now. And so that's exactly what we're going to be kind of talking about today. But Matt, when you talk about retirement plans with business owners, you always kind of talk about a goal. You know, what is the goal of a retirement plan? So kind of walk through that with us.
Yeah, we start every conversation off with, what's your priority? What's your goal? And there's two questions. First is this for your own goal? Is this for your own retirement? You want to stockpile for yourself, save money on taxes? Or is it to recruit and retain highly qualified employees, or both? And you can have both. You can check off both of those. And then the second question is really how much. How much do you care about putting into your own? Because everything in a group plan specifically, it revolves around what do you want to do as the owner. And oftentimes we'll get a phone call from maybe a manager or another staff member trying to gather information about these different 401k plans. But at the end of the day, it's all about what does the business owner want to do, because then we'll back into the plan design based on what those answers are.
Love that. And for those of you that are just looking, and not thinking about a business retirement plan, but just looking to put money away, there are also some retirement options on the personal side. We look at a traditional IRA or a Roth IRA. We're not going to dig into these here because we really want to kind of hit the dirt running on the business retirement side. But check out our blog post. We have a little bit of information, kind of what the limits are for those and things like that. But Matt, when we look at, we want to just put money away towards retirement, I think we have to break it into two pieces. For those businesses that have employees and those businesses that don't have employees, or no outside employees outside of the owners and maybe their families. So let's start with the latter. Those that don't have any outside employees, you might just be a solo business owner. You might have your spouse with you, maybe your kids, something like that. What retirement plan options are available to them?
Yeah, as a solo business owner, and with those two questions, that removes the first one, right? It removes what is the goal? What is the priority? Is it retaining, or is it, obviously we know the answer to that. Now it's you want to stockpile your own retirement, or you want to save money on taxes, right? And that's good. So let's start with kind of starting at the lowest point and working our way up to maximizing contributions. And like you mentioned, individual that's $6,500 per year now, right? An individual IRA, Roth. And that's okay to start with that. If you want to do less, that's okay to start there. But above that, we're going to look into a SEP IRA would be a great option for that. The new contribution limits for a SEP IRA are now $66,000. Those are calculated a little bit differently, depending on the structure of your company, but those are all considered employer contributions. So we talked about this before. Every retirement plan, every business retirement plan is structured around employee contributions. So you as an employee of your own company, which comes out of payroll if you're filing as a corporation, or employer contributions. So like profit sharing, things like that. And that comes out of your corporate account. That comes directly from a contribution from the business. So a SEP is all employer contributions. historically, like we talked about in the last episode about the Secure 2.0, historically it was all pre-tax, but now we're hearing hints of it might be allowed a Roth contribution into the SEP. So again, we're still trying to figure out how that works. But that's kind of step one. So let's assuming you're a S corp and you're paying yourself $100,000 a year, you're allowed to do 25% of whatever you're paying yourself as a salary. So it's $25,000 maximum contribution into the SEP IRA. The other option is a solo 401k, or often called a individual IRA. So they're kind of synonymous. I like to say it's a little bit superior to the SEP. The SEP often is a default offering, and maybe someone said, "Yeah, you should open up a SEP." And usually it's because it's a little bit easier to put together. There's no administration needs, there's no plan document needs, things like that. But when you're getting into the 401k world, there's a little bit more. You need a plan document for your plan. You may or may not need to file a 5500, depending on a few things, into the solo 401k. But I say it's superior because the way things are calculated, it has the same contribution limit of $66,000 as the SEP, but you can also do an additional employee contribution. And that contribution is $22,500 for 2023. So let's take that same $25,000 contribution based on a $100,000 salary that you're paying yourself. You're going to do 25,000 plus 22,500 for the same amount of salary. You're able to do, what is that? 47,500 contributions into the solo versus only 25 in the SEP.
Yeah. And I think that's a great point. Traditionally, when we're talking to business owners, a lot of times the question is, how much do you want to put away? And so if you're an S corporation taking $100,000 salary and you're like, I want to put $12,000 away, well, SEPs might be a fine option for that because you have no problem doing that. But if you're like, no, I want to try to max out my retirement as much as possible, we're always going to direct towards the solo 401k for that purposes. Allows you to put more money away. When you talk about an S corporation, we're often trying to keep your salary as low as possible. It's still reasonable. And so that lowers, by doing that, we're also lowering the amount that we can put into a SEP IRA. And so solo 401k helps us kind of combat that a little bit. So you're exactly right, Matt, or we're in agreement there, is that I believe that if you're looking to maximize retirement, solo 401k is the option. If you're looking to put, you have a set amount you want to put away and it's within that 25%, SEP IRA might be a great option for you.
Yeah. And honestly, it's something I forget about quite a bit to bring up is you can do a simple IRA too. This is kind of in between the SEP and the traditional just individual IRA. You could do a simple just by yourself. You don't have to employees to do a simple IRA. It's $15,500 can be used in that too. So that's something, it's taking the steps. So it's the individual IRA, the simple, the SEP, and the individual or solo 401k on top of that. So, yep.
Makes complete sense. So let's flip the switch a little bit. For those listeners that have employees, that these options might not be available, what are we looking at for retirement options for those small business owners that have employees?
Yeah, let's go back to the two questions, right? To what's your priority? And we don't need to go into which answer is going to put us into which option here, but let's start with the lowest and move up to the highest again. Let's bring in the Secure 2.0 into this again. There is a new plan coming out in 2024. It's called a starter 401k. And it basically mocks what we've been doing. It's called a payroll deducted IRA. And a payroll deducted IRA is simply a bunch of IRAs that is organized to where the employer is withholding the contribution and then sending it to the investment company. And it's the same contribution limits as a regular IRA, a traditional IRA or Roth IRA. You can do either one, Roth or pre-tax traditional. The starter 401k coming out next year is basically that. It allows the owner to max out the 6,500. It doesn't go through really any annual testing or anything like that. They're just calling it a starter 401k. In essence, it's a payroll deducted IRA. So that's kind of step one.
And I think, Matt, by the way, I think Life Inc. should get some royalties on that because
I know, right?
Before I met you, I've never heard of this payroll deducted IRA, and it makes complete sense, but I've never heard of that. So I feel like government owes you a little bit of a pat on the back, at least, for giving them this idea and rebranding it to the starter 401k.
Or at least they're refer them over to us. That works.
Yeah, there you
Yeah.
go.
We use that one when a placeholder. We use that as like a placeholder. We don't do it that often, but you're not allowed to do a match. You're absolutely not allowed to do a match inside of these things. So you are simply using it as a placeholder, allowing your employees to contribute to something through payroll deduction, because there's a psychological barrier between having a contribution coming out of your paycheck and having it come out of your checking account. It feels like a bill. So this is a good placeholder if you're not quite ready. It puts something in place, and that's kind of like, obviously the government is putting that in place too, because they understand that as well. So there's no cost to it. It's just more of a take an extra step between the payroll process and moving on to the next payroll day. So that's step one. The next one is really, it's going to be a simple IRA. You can technically do SEP IRAs as well, but we'll get into that on the next step. But a simple IRA, 15,500. There's going to be some changes to that. We might be able to do some Roth now inside of there, and it's got a 2% contribution rate or a 3% match is what that's going to be. Employers are now allowed to do more than that. Before you couldn't. Now you can do more than that. So blanket contributions or non-elective contributions are allowed to do that. So that's the next one. There's no administration needs for that. And then you can get into SEP. So we talked about, $66,000 into a SEP, which is a step up from the simple, but they're only employer contribution. There is no employee. So your employees are literally not allowed to put money into it. It's only whatever you give yourself. So if you're giving yourself 10%, if you're giving yourself 25%, like we said, that's the maximum. You have to give your employees 25% as well. So if you want to do that, great. That's extremely a high level plan, as we call it. But that is one step. You could do that. Some small teams do that, very small companies. Maybe they have one employee that's been around for a really long time. They just want to take care of them. We've seen that. But above that is basically getting into the 401k. And there's two kinds of 401ks when you get in the group world. There's traditional 401ks, and then there's safe harbor 401ks. And the traditional 401k it's almost like you're a cafeteria style 401k where you're able to pick and choose your matching investing schedules and design it however you want. There's a lot of testing rules and limitations for the owners, what they're allowed to do. Whereas the safe harbor 401k is more of a pre-approved matching investing schedule, and you get to pick from a few options. And if you choose that, the IRS deems it as a quote unquote fair plan, and you as the owner can now max out your 22,500 as an employee of your own company. So that is probably the best option in terms of 401ks for groups is the safe harbor 401k. Again, there's different kinds of safe harbors. Some have a vesting schedule. When I say vesting schedule, it means if your employees leave, how much do they take with them of the match that you've given them? And some of them have a 0 year, meaning if they leave, they take it all with them. Some of them have a 2 year, so on and so forth. So those are the best group options as far as the 401k plans. And then there's some more advanced options on top of all of these, right? And think of an upside down tiered cake, okay? So we have, and this really is only in the 401k world. If it says IRA at the end of your retirement plan, you usually can't do these things. If it says 401k at the end of it, then you can start stacking other plans on top of it, okay? So you have this, the bottom is now the smallest layer of the upside down tiered cake, right? That's the employee portion of your 401k, 22,500. Then you have the middle portion, which is basically it's the employer portion. That gets you up to that 66,000, also known as profit sharing. Okay, that's the profit sharing. And then on top of that, a third layer, if you wanted to add even more, we get into cash balance plans, which is basically a defined benefit plan, also known as a pension plan. That can get you well up into 300,000, depending on how old you are. We've seen 350,000 or more, depending on the age, and then adding all these other pieces into it. And there's some calculations and rules. You need to have an actuary involved on top of that. But then there's different kinds of advanced profit sharing techniques where the goal is to get you, the employer, most of the profit sharing plan versus the employees. So there's different techniques on how to design that part of your plan. And then there's which we're going to talk in the next episode, non-qualified options that we'll talk about, which are basically if you're trying to segment out certain employees or yourself, you might have to go towards a non-qualified plan, because if you have a qualified plan, like a 401k simple, there's rules and fairness. I call it fairness rules to employees. If you are non-qualified, it removes all those fairness rules, and then you can start targeting certain individuals and so on and so forth, which we'll talk about in the next episode.
Awesome. Yeah, that's great. So I'm going to kind of recap what I'm gathering, and feel free to jump in and correct me wherever I'm wrong. But I think when you're looking at a retirement option, if you're just an individual, you have a traditional IRA, a Roth IRA that you can contribute. And I always say too, if you're looking to put $5,000 away towards retirement, even as a solo business owner, just go down that route. It doesn't pay to set up a business retirement plan. But the bulk of what we're talking about here is business retirement plans. And so if you have no outside employees, this would be solo business owners with the only employees, if any, would be the owner or direct family members. You're kind of looking at two main retirement options, SEP IRA or a solo 401k. And when we're looking between these two, traditionally we're going to say, okay, how much do you want to max out? How much do you want to put into a retirement account? And that's going to direct us to SEP or solo. And traditionally, if you're looking to fully max out a retirement plan, generally stating, you're going to move towards a solo versus a SEP. If you're maybe not looking to max out, SEP could be a fine option for that. When we look at retirement options that are available for those business owners with outside employees or non-owner, non-family member employees, we have this payroll directed IRA, which next year we'll kind of talk about that in our annual episode next year, but that's going to also move into a starter 401k, where really you're not contributing anything as an employer. It's just a plan that's there to say, we want to offer something that our employees can have amounts withdrawn from their paycheck and that they determine, put into a retirement account. We'll handle that processing of that payment for them. And then we really look at a simple IRA, or what I think is the best 401k option, the safe harbor 401k. And again, those are just maybe just on complexity. How much, how many employees do we have? How much are they looking to put away? How much do we want to put away? And that's going to kind of direct us into a simple or a safe harbor. Of course, we can also do a SEP with if you have employees, but traditionally just don't see that too often. And then once we have done that, if we start saying we still want to max out retirement plans, there's some additional advanced planning options. We look at a cash balance plan and different things like that. And like Matt mentioned, later this year, we're going to be talking about non-qualified options and what that might look like and how those options might be an option to you as well. But Matt, did that kind of summarize at least kind of what's out there, what's available?
You said it perfectly, Mike. You did a great job on that. So that summarizes everything. And every conversation is different. So every design is different. So every one of these 401k plans that we talked about, the different kinds, the plan design is different. It's not just straightforward how much you can contribute. It's let's get the design, let's get these priorities figured out. And what do you want to do? Do we want to make it a rich plan for employees, or do we want to try to make it more geared toward you, stockpile for your retirement?
Yeah. And just kind of to summarize that as well, we will have in the show notes, there's a blog post that kind of lists out the summary of everything we talked about today. There's links in there to reach out to Matt. Matt, if you're looking to have a conversation with, you want to start a plan, or you have a plan in place, but you're like, I don't think it's the right one or whatever, Matt's more than willing to kind of jump on with you. And we've worked with Matt heavily. So definitely check that out. But I also want to be very clear that if you haven't checked out the Secure 2.0 episode that we did, we talked about some really cool tax credits where the government is essentially helping to fund these retirement accounts, at least in the first few years. And so if you don't have a retirement account set up and you're thinking like, hey, this is something we probably should do after either listening to this or your employees are asking for it, now is the time to do it, especially with kind of the Secure 2.0 tax credits that are out there. And so I just want to highly encourage you that if you're looking to start a retirement account, you have questions about if you want to or don't want to, or you have one and you're just not sure it's the right fit or whatever, go to our show notes, get in contact with Matt. We have all of his information, contact information. There's a calculator to see how much tax credits may be available for you, and just a ton of information. So feel free to reach out to Matt out there. Again, Matt's with Life Inc. Retirement Services. But to kind of wrap up this one, Matt, anything that I missed or anything you want to touch on?
Nope, you did a great job. Good summary. Thanks, Mike.
Awesome. Well, Matt, thanks again for coming on the podcast. And again, We're going to have Matt back on a little bit later this year where we're going to be talking about some non-qualified options as well. So be sure to tune into that one as well. Thanks again, everyone, for listening. And Matt, thanks again for joining us.
Thanks, Mike.
This has been another episode of the Small Business Tax Savings Podcast. If you enjoy our weekly episodes, please leave a review and share with other business owners. You can find previous episodes and more information at www.taxsavingspodcast.com. Thanks for listening and have a great day.